But silver's the one that surprised us. One, we think that silver going forward, and we think gold is in an ongoing bull market. It has paused, yes, for 1 3/4 years. Right now, gold's in the middle of that range. But silver, which had an explosion in 2020, which we got bullish, extremely bullish at $19.50 some odd cents, and it shot to 30 within 6 weeks. Look at what happened in March of 2020 during that sell-off route that hit everything: stock market, gold, silver, the whole deal. Silver went down and blew out a similar floor that it had built since 2015 around the $14 level. In that March 2020 event, it blew out that price chart floor, stayed down there for several days, and next thing you knew, it's back up in the price zone that it lived in, and it took off. I should have a black eye, though. Silver. Okay. We analyze momentum structural analysis for our subscribers, institutional and individuals. All four major asset categories. Yeah, the stock market here and elsewhere, the bond markets, foreign exchange, and commodities with an emphasis on gold and silver. And of everything we've called this year, if I delineated it, you'd say, "Boy, that's a pretty good record." But the one that is really bad, we call the stock market right off the highs, major bear market, we said, and we think it's only begun, bond market, et cetera, et cetera. But silver's the one that surprised us. One, we think that silver going forward, and we think gold is in an ongoing bull market. It has paused, yes, for 1 3/4 years. Right now, gold's in the middle of that range. But silver, which had an explosion in 2020, which we got bullish, extremely bullish at $19.50 some odd cents, and it shot to 30 within 6 weeks. We thought, oh, that's good behavior. Okay, then it went into a congestion zone, much like gold did. Silver kept going down under $22. It did it 3 times. In fact, 6 or 7 weeks after the August 2020 high, which approached $30, it traded under 22. It was the first sell-off, was very sharp. And then from that September 2020 low, it rallied back up. And in January of 2021 was again at 30. Then it pulled back again in a slow, layered manner. Twice in 2021, mid-year and late in the year, it traded under that $22 level, second and third time. Same level that we'd reached in the summer of the September 2020 pullback. So there's 3 lows over the last year and a half where silver dips under 22 and somebody buys it. Dips under 22, somebody buys it. Third time, and that third time when it turned up, MSA put out a report saying if silver will close, we'll get up above a 2440 area. It was coming up from the 22 to 23, go over 2440. We thought that would get it going and shoot it back to the highs. Well, it shot it up to 2750 very rapidly. So we got a $3 rally. But then something happened. And that's when gold in March reached up to its old high again, 2070, actually took out that high a little bit that it saw in the summer of 2020. But silver didn't get back up to its highs around 30. It said it was at 2750. And then you started this erosional pullback. When silver dropped back under 24 this year, actually under 2390, several weeks back during this quarter, we said, uh-oh, the breakout that we thought we defined above 2440 based on quarterly momentum has been negated. Something's wrong. So about 50 cents below where we said get in, we said, uh-oh, this is not good. We had no idea it would come down and take out all the price lows of the last 2 years. Meaning all those 3 lows just below $22, somebody was buying there, somebody was buying there, somebody was buying there. You talk about conspiracy. Somebody was accumulating silver under 22. They stabbed it out. Last week, we dropped down to $20.40. So if somebody's looking at a price chart of silver, you'd say, oh, golly, the floor just came out. It's no good. Right now, we're back up to 2175. So we're pushing back up toward that old floor, price chart floor. But when you look at a silver chart, it's hard to understand what caused that because, frankly, gold didn't collapse like that. It didn't go down into the 1600s, take out the lows of the last year and a half, but silver did. The stock market wasn't crashing. The stock market had a bad couple of weeks, but it was, double digits, 10% type drop. It wasn't 30 some odd percent. So it wasn't a crash event. And yet silver trashed itself. Okay, either the trashing is valid or it's invalid. What do I mean by invalid? Get a silver price chart back to, say, 2015, when silver made a bear low along with gold, late 2015. And look at what happened in March of 2020 during that sell-off rout that hit everything, stock market, gold, silver, the whole deal. Silver went down and blew out a similar floor that it had built since 2015 around the $14 level. In that March 2020 event, it blew out that price chart floor, stayed down there for several days. And next thing you knew, it's back up in the price zone that it lived in, and it took off. The low in that break was $11.50 area. Yep. It took out all those $14 lows. It was an invalid price chart sell signal. It aborted quickly. And next thing you knew, silver was recovered and on its way back up. We think this is a similar event, that what silver just did last week by blowing out that too obvious price floor. I say too obvious means any idiot looking at a price chart can see it. Therefore, it's pulling his hair out. Silver's no good. Well, it was no good in March of 2020, right? Not so. That was a bear trap. We think you just saw a bear trap. We don't have enough evidence yet in terms of upside turn that says, okay, it's over with, we're going back up. It won't take too much more. And so we're updating our subscribers when we see enough evidence that, in fact, silver has finished its vortex low, sort of a replica of March of 2020, and is ready to go back up. So that's our black eye of the year, silver. And yet it's the market that we frankly love the most in terms of its very, very long-term technicals, in terms of its relative pricing to other assets, such as silver price versus gold is at very low levels. In fact, if you go back in history the last 5-10 years, you'll see we're at a level now where if you start to see a turn, you're coming off of a very good bargain level. And over the last few days, we've started to see a ratio turn between silver and gold, where gold is nudged up and silver has sort of shot up $1.50 or so. If that continues, then that's sort of affirming our sense that silver put itself into a bargain basement situation. But silver in relation to anything in the world, probably the price of cow manure, it's lower than it's ever been in relation to that. It's lower than it's been in relation to gold. Lower, it's very low in relation to the commodity complex. So either something's wrong with silver and it's no good anymore, thousands of years of value, like gold, held its value, or now it's trash, or that was a bear trap. And we go with the bear trap argument. And we think that once it demonstrates that it was a bear trap and it's reversing, you'll probably shoot back up again. And at that point, we expect silver to outpace gold on a percentage basis.